Hello, my name is Blaine Anderson. I'm a tax-smart wealth advisor and certified financial planner at Bander Wealth Management. I want to share with you today one of my favorite accounts. This is known as a health savings account. I like to refer to it as the tax triple play. It's one of my favorite types of accounts because it is the only account that provides all three tax benefits when utilized the way I'm going to share with you today. Number one, a health savings account provides a tax deduction. At the time of this recording, the maximum allowable contribution for a family is $8,300. So as a contribution is made, it gives you an $8,300 deduction on this year's tax return. Number two, it can allow for tax-deferred growth, meaning that when those funds are invested, the gains are tax-deferred. And then lastly, number three, when utilized the way I'm going to share with you, you can also receive tax-free withdrawals. So I want to provide to you three levels of utilization when considering the use of a health savings account. This is something that we share with clients. I have a template that I'm happy to send to you, but I'm going to share with you three levels of utilization. Level one is opening that account, making the annual maximum contribution, and then using the account for your health-related expenses. You'll get a tax deduction this way. And these health-related expenses can, of course, be copays that you have at the doctor's office, medical expenses, out-of-pocket expenses. They can also include things like LASIK eye surgery is something that I did. We've used our health savings accounts for our children's braces. Can even be used for over-the-counter expenses like Advil, sleep aids, or even contact solutions. So with a level one utilization, you're at least getting the tax benefit and the upfront deduction. Number two, the level two utilization is to, of course, fund it each year and then to invest the funds in short-term investments and use the HSA account for higher dollar expenses, or maybe when cash flow is tight. But the goal is to allow it to sit in the health savings account and earn a little bit of interest through the investments. And this is something that we do here at Bander. We open up health savings accounts and then we can invest those dollars. And so they're meant to be short-term investments, to use the account for when cash flow is tight or when there's expenses, but we're getting some of that tax-deferred growth benefit. And then the level three utilization, I like to look at it as a quasi-Roth IRA account, because here's the idea. We make that annual contribution each year and get a tax deduction. And then we invest those funds in long-term growth funds with the idea that money can grow and may even be in the account for 10 years or even 20 years. Now, you're still going to have healthcare expenses, so you would pay those out of your own pocket. And in order to really maximize the level three utilization, it is important that you keep receipts. What my wife and I do is we have a Google Docs folder on our phones, and as we have medical expenses, whether it be at the doctor's office or whether it be over the counter, we take a picture of those medical expenses and then upload them to the folder. Because the way that you get the level three utilization and the tax-free withdrawal benefit is to reimburse yourself. Now, that reimbursement can take place in 10 years, 20 years for expenses that perhaps you have now can be way down the road. But we want to have some sort of documentation of that expense, and then we will reimburse ourselves. But the idea is that we were able to get 10 or 20 years growth out of it and then take a tax-free withdrawal in 2044 or 2050. And that way we get a tax deduction now, tax-deferred growth, and then a tax-free withdrawal. Now, one thing that's neat about a health savings account is that in retirement, let's say when we're making Medicare payments, we can use the health savings account for those Medicare premiums. We can reimburse ourselves from the health savings account for medical expenses that happen now, even though we don't reimburse ourselves for 20 years. So a best practice that I share with clients is to save those receipts. Save them digitally, save them in a Google Drive document. That way we're not trying to keep a folder and having to save all those receipts. But I think it's worth it. I think it's worth it to use a health savings account. Many of our clients are phased out. Their income is too high, so they can't use a Roth IRA. But that's not the case with a health savings account. To contribute to an HSA, you must be enrolled in an HSA eligible health plan. For 2024, this means that you have an annual deductible of at least $1,500 for an individual or $3,000 for a family. It also means that your out-of-pocket does not exceed $7,500 for an individual or $15,000 for a family. So there's a few little caveats, but the main thing is as you look at your insurance plan, see if you're eligible for an HSA. My encouragement is often to look to use that health savings account, at least get the level 1 benefit and the tax deduction. If you want to use it as a longer-term growth account that can get the second tax benefit, which is tax-deferred growth, or even that third tax benefit, which is tax-free withdrawals, let us know. We're happy to help make that health savings account an investment account for you. This is an idea and something that we implement often with our clients as tax-smart wealth advisors. Always happy to help you understand how this might apply to you individually. Hope you found this information useful. Thank you.